it's now going to share that information into Spread Monster. So see all that data. Here on the left, there's the open states that are now showing. And now we have our checkboxes. The open states, there is a win rate and account to them, but right now it's just saying not applicable. But there is a win rate to them. An account, it's just not showing at the moment to prioritize what I'm working on. So when I bring in the code, go for the core first, and then I'll come back and add, more bells and whistles, just so I can moving forward. Now we're bringing in our new option data, which is real time. So when we go over here, it'll show the last update was at 12:45. So what happens is there's a little bit of a delay in the process because of it has to pre-process. But now it's taken out all the delay for the quote. So it's like whatever processing it has to do, that's like right up to date. Quote, real time. And it processes if that takes 3 minutes or 5 minutes or whatever it takes. And the window kind of expands and contracts depending upon the complexity of what it needs to do. It's using the real time data. So over here on our statistics, the open states, if I want to see where they lie against our spread monster data, I can right click and I can check on all open states. That's showing me the graphs. Idea if my open states are above a wall long, below a wall short, exactly where they are in relationship. So spread monster for tomorrow, based on the price we've got, is computing this yellow zone. And it's saying this is, range of price, and most likely it's between the yellow lines. And so I know in relation to that, where my open states are, I know if we claim an open state up here, I've got to break a wall long. I can now anticipate state up here, I've got a wall. I know the wall's not a high probability to break. So that open state could take longer in the future. And way down here, I've got open states down here. Open states a little more in the middle. So these are more achievable because based on tomorrow, and as we get to 4 p.m., closer to 4 p.m., this is going to lock in. And where my range is at, I know that I can possibly knock these out. And again, I'll get closer to 4 p.m. to lock. So let me clear that. Another thing we can do is we can now mask off what's not likely to happen. So you have two things in the market. What is likely to happen, what can happen mathematically or in a model, and then you have the opposite. What's most likely not to happen in a model, what is. And let's say I take my win rates with the low odds, less than or equal to 20%. What that's going to do is it's going to find a thing that is very low odds to achieve. So let's say we're about 4 o'clock and our green line is locking in, which would be the close for the day. So let's say I locked in. We're about at 4. I know tomorrow, here's my sandwich. Because I know it's 17.65% above and 17.65% below. Those happen to be the exact same numbers. So I know my range of travel tomorrow is inside this envelope, right in here, most of the time. So I know if I'm betting outside of that, like maybe I'm betting on a 2.94% odds win rate, I know that is not happen. So I have that in my head. And then we can do our win rates with 80% or better odds. So tomorrow those have 80% and better odds to be achieved. In, because we're not near 4, but right now it's just showing that, That. Now when we go over to our density graph, got changes in there. Now I'm seeing purple X's show up on the left and on the right side. So it's like, what in the heck are those purple X's? What do they mean? So what they are is based on the fractal data's positioning, it figures out where the range open and where the range of close is going to be for the next day. We can see the clustering effect in this. That means if we were near 4 p.m. Eastern, and this is Wednesday, showing tomorrow, model for tomorrow's session, that if we closed on this green line right here, and this is what I'm going to do. I'm going to put it in paint. I can draw on it. Then, so here's our ring, which represents the close or the last sell price right here. Same for Wednesday tomorrow, that our opening has been from here and what by opening. This is 9 p.m. So first trade price. So that's the purple. And you're like, okay, great. I kind of get that. But how can I use that? So what I do is I look for the clustered areas. If you see where we have this propensity to open here, let me mark it in red so it's a little more visible. So that means that tomorrow, this line on our close, we tend to into this area. And you could even use that top X, but I'm trying to see where these are closer, because that means that the outcome there. Plus, so the outcome has been in that tighter range. And then from there, we have from here down. And then from there, it's pretty iffy that we get into these right here. And it is within possibility that we get into here. It's not like super often. So this kind of clues us in. It's like, okay, it's approaching 4. Do we want to take a swing at overnight volatility? So this here, that represents overnight volatility. Now, the more purple clustering we see beneath us, like this green line right here, then the more propensity it is for it to open down on the overnight session. So I was marking Meta the other day using the same technique, and it gets moved. I don't know, it's like 2,500% on I think the 600 contract or whatever. And all I did was this: I just looked at where we were relative to the close of session, and then where we're going to open, and then the potential of the upside. All I did, super simple. So again, this is overnight volatility, and the X's are marking off where we've been. And the way we can figure that out is, we can simply move the curves over, and it'll, that's 470.31. 480.36. So we can see where we're at, 472.18. So, if you're like, oh, I think the market's really going to take a dive for whatever reason, you can come in here and be like, okay, I've got however many X's are here. Let's say this represents a 30% of the cluster. So I've got a 30% probability to hit that. So out of every 10 trades, only 3 of them may work. I may get lucky, and on the first one I hit it. And then if I try it successively, I may end up in here and not really, not get beneath that set of clusters. So that's kind of how that works. And see them, you can hit this hide and close button, and it will take them away. That addresses the open. Now we've got the flip side. Okay, great, that's the open, but what's going on with our close? I want to know from the prior day to the next day, what's been relatively happening to the close in relationship. So today we want to know on Wednesday, tomorrow, where's our close been in relationship to today's close and in relationship to the opens? So that's answered on the back end here. We have our close. So this represents 4 p.m. Eastern. Last trade price. It's figuring all this stuff out mathematically. It's building a model of what's been happening. That means, let's say we did open up down here. It means our lowest hanging fruit has typically been here. Well, less one. I've noticed there's one that seemed to be down here. But our lowest hanging fruit has typically been here. I have a crazy outlier. From there, all the way up to here. And see this clustering? So we've had quite a few times that we've ended up here. So that's just saying that there's lots of the price action that's up in that area. And then we've got, maybe we fold that X into that. And then we've got, the white space in here. And then we've got these other areas here. So when I'm on let's say this is Tuesday at close, that means Wednesday at close, I've gone from here to here a lot of the times. That means if from here we dip down, a lot of times we've come back into here. Or from here, if we've, gone up, a lot of times dip back into there. And in fact, based on the fractal data we have, if we're here and we get up here, so every time on this fractal information back down into here. And the reason is because we have no X's up here. There's nothing up here. That means that there's like a neural net and, state vector machine, all this stuff out. And that means it's figured out that we haven't, under this sequence, we have not yet successfully been able to have a close up above, which is kind of interesting because on the Wave 7 daily, the VIX, as M3 was showing, is rising, which then again argues that, it's a confluence with this, that the price action is kind of overall trying to go short. Now, sometimes, like, what was it, last Tuesday? I was showing this at the last minute. We had a $2 put. I think it was like 350. So we had a $2 put, 350, sub $2. And then we opened down here. We had, so it went to 10. Some crazy person bought it for 12 peak. So we had that. And the premiums have to be priced accordingly. So that can happen. Like, let's say here, they're already offering up that put down here at $10. Well, there's virtually no upside from that day. The peak was 12. So if they're offering the put up here for 10 and the peak, let's say we pull back down in this range on the open and the peak is 12, that means there's only a $2 upside. So that doesn't make any sense. At that time, it was priced at 2, so it let it have a $10 price, fairly steady state price, exit, and then a $12 peak price. So, anyways, back to the X's over here. When we see no X's up here above, so we don't see any X's. That means under this sequence, the close has never been up here over 200 days loaded. And again, that shows that if we do get up here intraday, there's a likely move down. These, we don't have any of them up here. So that's what the X's are about. These are on the 4 p.m. at close areas. And this is the 930 each open, 930 East open areas that it's computed out. And again, this is so, on a linear graph, if you're trying to compute this out, it won't, not really find the values because this is just using fractal data, relative positioning. So that's how it's finding the values. So it's going through a lot of transforms in the code to find this out. And it's another great confluence that, as M3 was suggesting this morning on the Wave 7 Daily, that we're rising on the VIX. And this is suggesting that, based on our relative positioning on the fractal, that we're closing beneath the prior day's close. So it's in confluence. It's showing, okay, we're here, a totally different model done a totally different way is in confluence with the Wave 7 Daily, where it's trying to break the vector and climb on the VIX, which is suggestive that the stock market as a whole is under downside pressure because people are hedging, buying puts to, try to protect positions. So this shows us a whole other thing. And then it shows us how bad it tends to get on our closings. And again, we can look at our X's. I can just kind of put a line through them and be like, okay, here's the halfway mark. So 50% of the time we close up here. And then I don't know if that's a halfway mark exactly, but 50% of the time we close down here. And maybe the halfway mark is more like up here. So maybe I drew that all like crazy, but something like that. So that means when we're closing over here on Tuesday, this is Tuesday, that tomorrow we have a 50% shot at closing down here. And then we have a percent shot at closing up here. This is it's not drawing out a single number and say we're going to close it, 480.10 or something like that. It's just like a zone. And so probably I don't know. I'm guessing down here, if this was this, this is probably like I would say plus a 1,000 upside if we close in this range plus. And then here it's probably, I would say, at a break even or minus 100, probably. The way the pricing would up in this area. Something like that. Now, also, we're showing our last date and time that our metric. So this right now, the way it's set up, and it shows the last closing going into the next session. So today's it's showing at 12:50. We're at 1:16. on the 6th. But when we get to 4 p.m., it's going to show like ceiling May 6th, 4 p.m. or 4:05 or whatever. So it's going to show at 4 o'clock or after. And then in the morning, when we open, it's going to show the same thing. And then after the market starts and it starts collecting new ceiling 4 PML information, then it will rise. So the other thing I'll show too on this chart, when we have, like, let's say our open state lines on, we have long, or let me show it in a different way. Let me show the low odds win rate. So this is masking off everywhere we typically don't go. If we want to get the labels, so we have the feature now, if we want to get the labels off the screen just to see the lines, we can hide the label statistics. And now we just see the lines on the screen. So we can see that running in tomorrow's session, high resistance up here. And then we can see these end up being supportive areas. So we can see the various supports down below. So we can see that through this, the market's highly tuned bearish heading into tomorrow, which is aligning with our VIX again. Now I'm going to load, let's see, contracts for the 7th, for May 7th. Now this contract data, it's not being streamed, it's not being updated because it needs to remain static while working on this graph. We can't have things flying around while we're working on it. And what we've got is we've got more information now since we have a new feed. We're getting a lot more data we can put on. So we're able to compute BE, which is break even. And you'll see now that it has a black background and this has a black background. And what these are, it's a little asterisk. And it'll say down here, it's the most reactive contracts to underlying price. This is the contract that will move first. It's on the left, it's called contract. So if the price are up, this is the one that will catch that price the first. And if the price is going down, this is the one that will catch the price going short. So it's the 493 put or 55 call. And notice the price. It's $27.62 on ask. It's $11.41 on for the put side. So they're pretty expensive contracts. So now we can see the break even as we're picking various contracts. And we can see when we get up into the higher areas how much the break even needs to be. And what does break even represent? So break even represents point move off the green line, which will be the close price at 4 p.m. up. So off the green line, if I pay $2.85 for this contract, so I pay $2.85, I need a 4.13 move from the close up by 4 p.m. Eastern to get my $2.85. If I pay $2.40, 6.8 close, move up for. If I pay $2 for this, I need 5.28 move up 4 p.m. Eastern to get my money back. That means if They are ceiling, so right now it's 485. Let's say 488 tomorrow. That means anything below or break even $1.04, anything below $1.64 will be worth at least $1.64. So that means on the pullbacks, 64, if we closed $5.92 above the prior day's close. Now, intraday, let's say we skyrocket 592, the implied volatility kicks up, then that ask price will skyrocket. Could be $3 or $3.20 or 285, or whatever it moves with the implied volatility that's calculated out, and the trader desire to purchase those contracts, which also influences the cost price because they can overpay. That will be the new price, so it'll go up. And so with that ask, now we used to show, now we're able to show again more stuff. So we used to show bid in here. So now we can click this and look, you can see the differential. So that was what we were showing before. Now we show the ask side. So you can rotate and forth. It helps us get a better picture of the desire, the fear, basically, the volatility that the market makers want to calculate out. Because the ask is them saying, well, if you want to get this contract from me, you better pay this amount, otherwise I'm not selling it to you. Lies now on the ask side, which is very relevant. See, today, these are calculated like two radically different ways. That our ceiling calculated out today is capturing this clustered top. So it's actually confirming that, that could be the top side. So it's showing us that visually. Now it's also, and these are done a totally different way. All this math is 100% different. And that's very important that we're not using the same math on stuff to derive the same results each time. These waveforms, these S waves right here, they're coming from the market. The stock market option writers, the market makers are dictating those prices. It has nothing to do with us. We're just mapping them out visually. We're mapping out that implied volatility in a sense. Our version of implied volatility. That's our version of implied volatility we're looking at. It's not the market. And what it's doing is it's taking what they're offering up on bid and ask, and it's just mapping it out. It's doing that on the call and the put side. So it has nothing to do with how these X's, these purple X's are calculated. Absolutely zero. These X's are calculated through our fractal geometries. Volatility does play into how they set pricing, because they have to use historical information. So normally IV is calculated historically through option pricing, but the option pricing is also a reflection of the volatility of the underlying market. So it's all kind of this tangled web. It's a ball of yarn. And you can see our calculated X's are in line with how the option pricing is. Because here our X's, they're not wanting to exceed where opening would be. If you're at 4 p.m. right now, this is the implied opening for tomorrow. And here's the implied opening for tomorrow on the short side of 4 p.m. So the closes are suggesting again, and I'll show you something else that's interesting, that we're on the short side, the rising VIX overall over days. It's not like instantaneous, it takes time. And the system calculates out an imbalance. See down here on the right, it's saying imbalance 799. It's saying, hey, the market is having a short side imbalance. There's more sell side than there is buy side. And it's figuring that out through all these metrics that we're producing. And it's saying the imbalance is short, and it visually tells us that. So we can come in here. We don't have to really know anything of what we're looking at. Like, let's say I'm like not really sure. Russell's telling me all this stuff. I don't really get that. I don't understand that. Still, it's going to take me a while to absorb it. So you can look at the screen and be like, oh, my imbalance is short. So that means that overall the market is trying to pull back. It's trying to go to the short side. It throws it to the right or it throws it to the left. Now, if we had a long side imbalance, it would be over here on the left. Coming in today, we had a long side imbalance and the market's trying to climb. So even though we opened up down, it's still trying to climb. For tomorrow, where we're at right now with the data, and that can change by 4 p.m. I want to stress that because we're only at 128, so we need to get closer to 4 to get a good read into the next session. But for right now, it's saying the imbalance is to the short side. There's more sellers out there than there are buyers. So there's more stock coming online, more QQQ coming online for tomorrow's session, heading into tomorrow's session. So the market is, trying to roll down, and we've got these X's here that are telling us where the market's trying to come out till tomorrow. So depending upon how aggressive, how much the volatility is, depends on how deep we hit our X's. If it's, let's say the volatility of the short side tomorrow, let's say it was pretty bad, like on the worst side, then we're going to be down here on the close tomorrow. If it's pretty heavy short, if not, we're going to be up in this area tomorrow on close. Still be short, just not as hardcore short. Now underneath, it's showing our averages in the columns. So on the S side, and this is a gauge. So it's just averaging the ask. It's coming up with a simple average and saying the average ask on the call side for the volatility we're measuring out is $8.55. On the put side, it's saying the average ask is $6.27. So the put side is actually cheaper right now because it's $6.27 than the call side. So that means right now we have the market is to our benefit at this point in time for the put side because it's cheaper than the call side. Kind of flies in the face of initially, it changes over time, but it kind of flies in the face of like you'll hear on the internet reading books, oh, the most expensive side is expensive because that's the direction the market wants to go. We're saying beforehand what is the reality of the situation. So the put side is less expensive at this moment in time, even though it shows our imbalance is to the short side. Premium on the short side, on the put side, is a little cheaper right now. So there's a little benefit in there for us. It's not like they've overpriced the options yet. Now on this QQQ, I've seen this thing go like, I don't know, $30 on the ask on average, $28 on severe moves, where we really get pulled around. Now, the IV, it does the same thing. It's averaging out IV. It's at 36.61, 36.47. So right now, the IV is showing a little bit more elevated on the put side, which flies in the face of the cost of the ask side. So the BE is something I like to look at. The average ask is something I like to look at. Again, the average ask, I've seen it up to $20, $30 plus. If there's a huge move, there's a lot of fear. It can really have a pendulum swing. The IVs, there's this blanket thing where, if it's in the 50s, good trade to put on, or 70s. And we can see that here. So notice our IV, and every stock has a different reference point in their chain. So what may be 50 to QQQ, maybe 70 or 120 or 1.2 to something else. But here it's showing a 50, 56. If we look across at our volatility, the center, historical volatility, so a 56 does support that, buying long down here or selling the premium down here can be beneficial because it can decay, because it's not like we're down here on the pullbacks or the extensions for long periods of time. So it's like the IV spikes and then it starts to retract. So capturing premium has upside because it's been elevated. And so when you're selling premium, you want to sell and collect on the decay. So that's kind of what this is showing. Now, one point I want to make is going back to our X's, when we pick other aggregations, the X's represent that time. So the X's in this case represent Wednesday open and Thursday close. So it's not accounting for Wednesday close. It's just from Wednesday open to Thursday's close. And then if we pick 3 days, that will be from Wednesday to Friday. So Wednesday's open, and then Fridays. And again, these are just mathematically approximated. So their guide helps give an idea of a range. And here we show that from Wednesday to our Friday, the bulk of the closings have been below us because we're down here. And note our floor today. This implies that our floor moving in front of us needs to adjust down. So moving into Friday, our floor is suggesting that we need to move down because our closings have been lower. So I think, and so this is, what day is this? What's Friday the 9th? So we're going to see what it looks like for Friday. Okay. So I can already tell by that pattern that the downside, the short side, there's a little more fear here because of the way that's carved out. And this imbalance again, we're in, kind of like, we're in the early afternoon session. So it's not as critical right now what it's saying, the long side. The imbalances on the long side. See as we get closer and see what it thinks the imbalance is at. PM today into Friday. That the changes that we brought in. We can also add and the ask. These are the most contracts that are put up here. Five oh six. So because they're kind of around the money. So making them the most reactive. People like being able to go in here and do this 20% odds. This will assist trying to find IV levels because it's always a challenge kind of looking at these. So you can now click on and help mask off the IV lines, applying percentage levels to them. And then we still have our coloration, So we still see the color areas back here, of course, that kind of guide where historical volatility's been. And the darker the coloring here, the more times price action has ripped in that zone. So it can have this zone here where the price action is gone into it high and low. So I think that's it for this right now. There's more to Spread Monster updates that I need to bring in, but for now, this is the other one I've brought in. So, yes, that's it.